Good morning, everybody. This is the live market open for August 10th. How's everybody doing? I'm Yochai Alam, Forex Crunch and Market Movers podcast, doing the show as usual for FX Street. As always, we'll keep you up to date with what's going on in the markets, recent developments, cover various charts and levels. Today, we'll also focus on two different currencies. One is not so popular, but it should get a lot of attention now. It's the New Zealand dollar, NZD. Rate decision and other stuff. And then we'll go to the most popular currency pair in the world, the euro dollar, and we'll ask what's going on, what's wrong with euro dollar. Okay, and finally, of course, we'll have a preview for the next 7 days and wrap up the show. So good morning to everybody here in the chat. Of course, the most important part, you're welcome to it all the time, is your questions. So if you cannot see the chat box for any reason, alongside the video, please go to the address here, tlk.io/fxstreet-forex-live-video. So what's going on in markets? Well, generally, the US dollar is a bit down in the past 24 hours or so. The mood has improved. So the mood is maybe a bit slow, some summer slowdown. We had 3 very busy weeks beforehand with the NFP, Bank of England, ECB, Fed, all that. And now, not so much going on, so maybe this is a better mood. People are watching the Olympic Games, and there is sort of this kind of summer slowdown. Great non-farm payrolls also improves the mood. It's a win-win situation. Let me explain a bit about that, or maybe we'll talk a bit about the NFP. And then, so on Friday, of course, the king of Forex indicators, non-farm payrolls in the United States, 255,000 jobs gained, better than expected, wages up, 0.3 month over month, better than expected. Year over year, things look good. The unemployment remains at 4.9, but the participation rate rises. Even the average work week is up. All in all, it's very, very hard to find bad stuff in this report. It seems all good, but not enough for rate hike coming anytime soon. So good morning, GM. Good morning, everybody. So it's sort of a win-win situation where the US economy is sort of, it woke up after slowdown in the first quarter, a bit maybe in the second quarter, but so it's good news, more activity. The United States can lead the world forward. On the other hand, it's not enough for rate hike for various reasons. First of all, one of the reasons for not having a rate hike is that there are elections in the United States in November, presidential elections. So I don't think the Fed will rock the boat. They'll be blamed by both sides of intervening in the elections. Secondly, it's still not enough. We need a few months of good news for a rate hike. Inflation, as we've learned also this week, is still quite slow. Okay, 1.6 on the core PC price index. All in all, it's good news for the economy, not enough for the Fed to move. So this is sort of providing a good environment for stocks, good environment for other risk assets. Okay, so yeah, that was the NFP. Hi, Ed. So it's you behind the GM. Okay, now I know. So anyway, what else did I want to? Well, you know what? Let's look at charts just a bit. We talked about let's take a look at the euro dollar. Euro dollar currently 111.40, moving up. As I said, this good non-farm payrolls initially helped the US dollar. It sent euro dollar all the way down to 110.50, but from there we have recovered. We're basically back in the range. The positive mood, the risk-on mood, if you wish, but it's not only risk-on. The US dollar is also losing against the yen. This dollar sell-off continues also against other, well, is across the board. And now we're back in the high range, 111.40. Some support, 111.15. Resistance, 111.90, and followed by 112.40. Okay. Pound dollar. Here it's, well, worthwhile to pause and talk about what happened in the Bank of England's decision. So the Bank of England fires a lot of ammunition. Okay, also main sort of big event that we had last week. So the Bank of England did everything it could, basically, almost at least. They told us, first of all, they cut interest rates to 0.25%. They announced another 60 billion pounds in regular QE. That means they're buying 60 billion more pounds of government bonds, up from 375 billion. Last changed in July 2012. So 4 years later, they're adding more QE. They introduced two new measures. First of all, 10 billion more in corporate bond buys, and a new lending scheme called TFS, meant to encourage banks to lend money to the real economy, worth 100 billion pounds. It's a bit different from the previous LFS lending for funding for lending, FLS. And they also told us that they will probably cut rates once again in November when they have fresh data, another quarterly inflation report, but that they will not go to negative rates. Negative rates can backfire. Okay. And they told us that they're also doing other regulatory changes in liquidity provisions. All in all, they're doing everything they can. Now, in their forecast, they cut growth a lot. Okay, the Bank of England cut a cumulative 2.5% off growth, especially in 2017. So this year they're expecting slightly slower growth. We're already in the middle of the year. Next year, very weak growth. In 2018, a rebound. But there's, of course, lots of uncertainty. They told us this thing again and again, and the forecasts are not one exact point. They're sort of what the Bank of England has as a fan chart. So they have a range of options, and this range does include the option of recession. Carney didn't say it out loud, but he did say, he did hint that a recession is possible. This huge move from the Bank of England certainly hurt the pound. Let's take a look at the pound. They see more questions here. I can't find if USA had ever raised rates before elections. Also, the United States has defaulted on obligations. Civil war leaving gold standard. I wonder if it's long stock. Ponzi scheme. Well, to answer your question, I also don't have historic data. Civil war is a long time ago. Leaving the gold standard was certainly a good move on the behalf of the UK and the US. In the 30s, other countries that got stuck in the gold standard saw their economies recover far more slowly or fall into authoritarian regimes. So, well, that's a whole different discussion. Regarding the Ponzi scheme, I'm not sure I would call it a Ponzi scheme, but yes, bonds are very, very, very expensive. Yields are so low. And how long can this last? I mean, it's mostly QE money. Negative rates, deep in negative in Germany, Switzerland, Japan, and other countries. Even Spanish bond yields are very, very cheap. I mean, this in theory should encourage government, to borrow cheaply and to spend the cash. But let's see if this happens. So let's go back to the theme of the pound. So this is what happened last week. On Thursday, we had the big announcements from the Bank of England and the press conference. We had the pound dollar falling off this high range of 132.50 to 133.60 to the lower range somewhere around the 131 handle. And then we even fell to deeper ground, especially this week when previously hawkish member of the BOE, Ian McCafferty, said that they'll continue cutting rates and perhaps adding more QE. The door is wide, wide, wide open. Okay, so currently as the US dollar is weakening a bit, we are currently at 130.30, but we already fell yesterday to 129, almost 50. So maybe we'll add this line to the chart. Still above the levels that we've seen in mid-July when we didn't know if there would be a new government anytime soon. And that was 128.50 and 127.90. Deeper lows, okay? Anyway, currently the range is 129.50 to 130.60. Okay? I think Jax. Hi, Jax. How are you doing? Oh, and hi, Hans. Hi, everybody. I think the yen will hit 100. Yeah, certainly possible. Let's talk a bit about the yen. And we talked about the yen in previous weeks, but let's do a recap. The Japanese government announced a stimulus program worth 28 trillion yen, one of the interesting projects that I found there is that they're going to speed up the high-speed train, the maglev train between Tokyo to Osaka. They're going to build it very quickly. Some of this 28 trillion yen is existing plans, not new. Lots of noise, lots of smoke. So this is some kind of disappointment for markets that they expected a bigger stimulus package. But it wasn't totally unexpected after the Bank of Japan introduced only a bit more stimulus. What we do know from the Bank of Japan is that they're reviewing their whole QE program, and they'll give us some more information at the end of September. So there's going to be another important big market moving BOJ decision at the end of September. This is what we know for sure. But for markets that are ever hungry for huge helicopter money from Japan, this wasn't enough. So dollar yen did first of all, on the big fall came here on the lack of stimulus from the BOJ, and then another fall came on the disappointment from the government. Also here, we're seeing some kind of, well, there was some better mood in markets, and it's not all terrible, but sorry. This is the big fall of the BOJ, and this is the second fall of the government sent it to the 100 handle. Since then, we did see some recovery. Recovery came mostly thanks to the non-farm payrolls, but once again, we're seeing that dollar yen is slipping. So currently, I would say 101.50 is resistance, 103.40 further resistance, and let's add another support line here at the lows seen last week. So that would be 170, and of course the round 100 level is very critical. Support 99 follows, that's the post-Brexit low. Okay, so other than that, I mean, anything can push the dollar yen to 100 because of safe haven flows. One of the themes that is burning in the back burner, well, the world is watching the Olympic Games, and I'm glad that my country, Israel, just won a bronze medal in judo last night. But the world is watching the games. In the meantime, in the eastern part of Ukraine, there is some flaring up of tensions between Russia. The story is in the back burner, but you never know how these things can flare up. I'll just say that 8 years ago, the war between Georgia and Russia began on the first day, on the opening ceremony of the Olympic Games. So you never know what's going to happen. Anyway, any kind of terror attack, action in Ukraine, Middle East problems, rising chances of Donald Trump winning, although he's, well, seems to be losing in the recent polls. Any worry about the world, any missile from North Korea, anything can strengthen the unsafe haven flows. Markets are very aggressive, very frustrating for the Bank of Japan, strengthening the Japanese yen. Okay, so 100 is certainly an option. I wouldn't rule that out. Okay, let's continue with dollar CAD. Another theme in markets is that the price of oil stabilized. Okay, let's jump to oil. 42.30 is the current level. We dipped under 40 last week, but a little bit less production in the United States, and many commentators saying that oil has reached a bottom. I'm not sure if that's true, but anyway, we did find at least a temporary bottom. Dipped under 40, taking some stops under $40 WTI crude oil. Back here at the previous ranges. Remember, we're still off the highs of above 50 that we've seen earlier this year, but well, still a 5%, even more than 5%, even 7% improvement in WTI crude oil. And this is also helpful for the Canadian dollar. In Canada, we did have a poor jobs report. The Canadian economy shed 31,200 jobs in July. This was a bit, of course, overtaken by the news in the United States with the excellent NFP. So what we had on Friday is a jump of dollar CAD. Good US jobs report, bad Canadian one. But with the ongoing strengthening of oil prices, dollar CAD doesn't go anywhere too far. So support 130, resistance, well, 130.80, 131.40, and then 132.40, low support at 129.10. Okay. Ed says, don't forget Korea and Iran brewing Inc. China disputes separately islands and Philippines are alert for China and high seas. Yeah, the territorial conflicts in the South China Seas. This continues. Many disputes there. Taiwan, Philippines, Vietnam. Everybody's involved. Lots of maneuvers there also by the U.S. Navy. So, and it's a back burner story, but always worth opening an eye for it. I was also watching this week the Ukraine story, so yeah, watch out for that. Let's continue to, well, we talked about the China Sea, the Pacific. So the Australian dollar is on a roll. What happened last week? The Australian central bank actually cut rates, but it was so well telegraphed. It wasn't a surprise, and they signaled they would not cut rates further. So we have, and again, with good news from the United States, risk on. The Australian dollar is gradually climbing higher. We have it moving up sort of in this trending channel. Currently 76.90. Lots of risk on. It already crossed the 77 line. Support at 76.60. Resistance 77.40. Relatively looking good. Okay. What else? We had some trade data from China this week. It wasn't that good, but wasn't enough to hurt the Aussie. It wasn't terrible. And the Kiwi. New Zealand, we had last week a jump in milk prices. Great news. And today we'll do a special focus on the Kiwi and the rate decision and other stuff, but also enjoying the risk on sentiment. Currently between 71.60 and 72.60. This is the current range. High resistance 73.30, support 70.50. Okay. Other currency pairs, dollar Swiss currently at 98. So we did see the pair move a bit higher, but that's I think also because the Swiss franc is weakening. Swiss franc also some kind of safe haven. 98.50 further resistance. Support I would say at 97. Not my favorite pair. Euro Swiss also moving up. Maybe some quiet intervention there by the Swiss National Bank. Basically gradually moving up in range. 109.20, under 110, above 108. Very normal trading. Euro pound, here we have, of course, always more excitement. That's because of, well, here's the big leap thanks to Brexit. And what we've seen is the pair moving higher. This is fully related to the weakness of the pound, the Bank of England, nothing euro related. So currently at 85.50, resistance there at 86, support 85, and 84.20. Okay. Euro yen, relatively stable. Currently 113, 112 is some kind of support, 114.50 is resistance, 117 is further resistance. Pound yen, always an exciting pair. It fell off the bed, well, it didn't manage to break higher above 140, sorry, so it fell back down. Basically, again, the weakness of the pound, under 133.10, and, well, 130 is a round number, so it provides some kind of support, but further support is at the post-Brexit low of 128.50. Okay, so we covered all our pairs. Crosses, of course, questions about any of these pairs or other pairs are welcome. Let's continue with other events that we have that we had recently. We talked about oil. We talked about positive markets. Again, that's the main theme. Summertime, good NFP, not bad enough for a rate hike. Oil prices are rising. The world is growing. Everything is good for now. Okay. Other data, we talked about the Canadian jobs report, Chinese trade balance. We talked about that. UK manufacturing output came out yesterday. It was worse than expected. Also, the UK's trade balance was bad, but these are figures for June, so it's not that important, okay, because it's pre-Brexit. And yesterday we had a report that US productivity fell. Bad news, another reason for the Fed not to raise rates, but actually not such a surprise because productivity is lagging, well, is suffering for quite some time. Okay. Now let's talk about the upcoming events. Today we have in the US the JOLTS report. The Fed looks at it. It's a bit stale. It's for the month of June. It tells us how many job openings we had in the US economy, and also the number of quits. When a person quits her job, they usually go for a better job and higher paying ones. So a rise in the level of quits is good for the economy. Not such an important figure. Crude oil inventories always impacts the mood, not only oil prices, but the markets in general. At 9 p.m. GMT, we have the New Zealand rate decision. A cut is expected, but we'll dive into that more in detail later on. And then, of course, to our special euro-dollar segment. Tomorrow, we have, another event from New Zealand retail sales. Also in the United States, jobless claims and import prices. Again, not top-tier figures. On Friday, we do have top-tier figures, okay? So on Friday, we have, Chinese industrial output to warm us up, especially for the Australian dollar. At 6 GMT, German GDP. We had GDP releases from France, Spain, and for the whole Eurozone, but it didn't include Germany. So that's a big, big thing. We'll also have then the Italian GDP, the third largest economy, and the all Eurozone GDP at 9. But the more important events come from the United States. Retail sales for July. Let's see if US consumers continued buying. And consumer confidence, very, very related at 2 GMT. This is for the month of August. In theory, consumer confidence tells us a bit about, what consumers are going to do, the future retail sales, but it's not always highly correlated. Okay, so these are the events for the week. Again, Friday is the most important day, unless you're trading the Kiwi dollar, and this brings us to the next segment. This is a special focus on the Kiwi dollar. This week is the week of the Kiwi dollar. I know many of you don't trade it, but it's still very interesting. Let's talk about some general characteristics of the Kiwi. So it's a risk currency. In times of trouble, it falls, but not as much as other commodity currencies. And now we're not in times of trouble, as I mentioned. Currently, the market mood is positive. That means that the Kiwi gains regardless of what happens in New Zealand. Okay. Another characteristic, and we'll dive into that specifically, is that many figures are released only on a quarterly basis. Jobs, inflation, retail sales, and more. In many cases, it just gets carried away after the Aussies. So we have good news from Australia. Also, the New Zealand dollar rises, and the other way around. Bad news for Australia, and the New Zealand dollar falls, okay? But it doesn't always do that. It doesn't always follow the commodity camp. So sometimes we do see the Australian dollar rising with oil prices alongside the Canadian dollar, sort of getting carried away, but the Kiwi dollar doesn't necessarily do so. And another characteristic, why I do put more focus perhaps than the new viewers want, is that it consistently enjoys relatively good technical behavior. Not always the best, but sort of it's more consistent in that. Okay, so these are general characteristics of the Kiwi dollar. Specifically today at 9 GMT, Wednesday, August 10th, it'll be morning of August 11th in New Zealand. The Reserve Bank of New Zealand, Graham Wheeler and his colleagues are expected to cut rates from 2.25 to 2%. This has been very, very well telegraphed. We got all the possible hints about that, and that is priced in. I would go to say that if we have a rate cut of 25 basis points and a hint, that they're going to stay put for some time, no additional measures, then I believe the Kiwi dollar will rise despite a rate cut, okay? Because that's very, very priced in, okay? In general, inflation is quite low and not expected to rise anytime soon. So that's a reason to cut. The strength of the New Zealand dollar is worrying for this guy here, Graham Wheeler, the governor of the Reserve Bank of New Zealand. House sales are cooling. The level of sales, number of sales are cooling because it's midwinter in New Zealand, but prices are still up 8.6 year over year. So this could mean that the Reserve Bank of New Zealand chooses to do some macroprudential stuff, for instance, limit the tell banks that they must demand a down payment, let's say, of 50% of the house before they can take a mortgage. Don't know the exact levels, and this way they could cool the housing market and also lower rates at the same time. Okay, it's kind of magic trick. Usually rates go up in order to cool the market, but inflation is low and the currency is high. Okay, so they could counter a rate cut with macroprudential tools to cool the housing market, especially in the biggest city, Auckland. Okay, there is a potential for more cuts this year. This depends if they hint about more cuts coming, like the Bank of England did. It's of course dovish and it could hurt the Kiwi, and there's a good chance for doing that to keep the pressure because again, rate cuts are already priced in, and there is also an outside chance for a rate cut of 50 basis points from 2.5% to 2%. But that would be sort of a sign of panic, and central banks usually work very, very gradually. Of course, the most gradual central bank is the Federal Reserve. All right, so that's today's event. Again, 25 basis point cut is priced in. Anything more than that, heavy hints of more cuts or a 50 BP cut will hurt the Kiwi. Otherwise, the Kiwi could rise. But that's not the only event from New Zealand. Okay, we have retail sales tomorrow at quarter to 11 GMT. That'll be Friday morning in New Zealand. An acceleration in sales is expected, 1% quarter over quarter in headline sales and 1.2 in core sales. Again, released only once per quarter, very important. And the employment report next week before the show on also at the same time, a quarter to 11. Yes, that's the preferred time in the morning in New Zealand. But this report is slightly different. Labor costs have already been released last week. So it's only the employment data, still very important for the Kiwi. The employment change, last time we had a big rise, and the unemployment rate, it was 5.7 last time. Let's see if it moves. Remember, it's a quarterly report, making it more important. Also worth watching, at the same time, we have also PPI, Producer Price Index, again, released only once per quarter. But at the same time, we have the jobs report, and this PPI does not serve as a hint for the RBNZ. It comes after the RBNZ, okay? So it doesn't provide us with a signal. In any case, the consumer price index is more important. But anyway, we have a week full of events for New Zealand, retail sales, employment, PPI, and of course today's RBNZ. And let's wrap up the segment with a deeper look at the Kiwi. So these are the ranges currently for the Kiwi. 71.60 is weak support, further support at 70.50, which also was a double top. Let's zoom out and you can see how this level worked quite well in the past. So that's why I keep it on the chart. Okay, 70.50 here worked as a double top. Below that, we have 69.50. So 69.50, 70.50, 71.60, 72.60, and 73.30 are the lines I'm watching on the Kiwi dollar. Number of pips can be relatively low in Kiwi dollar, but the percentage changes and the technical behavior are quite good, I would say. Okay, so yeah, so that's currency of the week, if you wish, is the Kiwi dollar. Okay, that completes the segment about the Kiwi. And now another special segment about the euro dollar, the world's most popular currency pair. And I'm asking, what's wrong with euro dollar? It's frustrating. The ranges are quite limited. Breakouts go nowhere fast. Last week we had almost a breakout. Okay, we had this is a 4-hour chart, right? So look, we had this 111.90 level, the post-Brexit high. Okay, worked very nicely as resistance right here. Nice. Okay, then we had a move above this level. We reached 112.40, 50 pips to the upside. A breakout looked to me like a breakout, but no, we fell back to the previous range. Okay, so We did have a big move on Brexit to wake us up from another long period of frustrating range, but then we found another frustrating range to the downside, slightly lower, not very far, lots of frustrating trading over there. Anyway, before I move to the other points about the euro dollar, let's dive into the chart here. So 111.15 is some kind of support, followed by 110.50. 109.60 proves itself quite well, and the post-Brexit low of 109.10 is strong support. On the top side, 111.60, 112.40, 113.35 used to be support in a high range, and 114.20 was the high point just after Brexit and a bit before that. Just when we thought that Brexit would not be a reality. And above that, we have 115 and then 116.16, the high of this year so far. 116.16 in 2016. Okay, let's return to what we talked about regarding the euro. So as I said, the breakout attempt, as we've seen now, didn't go anywhere, and it's not the first time. So what's wrong with euro dollar? Does it have too many parts? Too many moving parts? Remember, the world's most traded, most popular currency pair. So we have any event from the United States, be it non-farm payrolls, retail sales, PMIs, you name it, and also recently political events, opinion polls in the United States. And in Europe, we have 19 countries in the Eurozone. Of course, Germany is the biggest and most important one, but figures from France also matter, from Spain as well. Political instability in Spain, problems of banks in Italy, you name it. Okay, so this should have provided for more volatility, but no, probably everything just offsets each other and makes a mess. Next point is the euro is looking for an identity. Remember, in theory, the euro is a risk currency. Okay, the yen is the ultimate safe haven currency. The dollar lagging behind. The Swiss franc used to be a safe haven currency, but what is a safe haven currency? It's actually a funding currency. So when interest rates were low, extremely low in Japan, money, and they still are, money is lent in Japanese yen and goes outside the country to investments of riskier assets. The famous carry trade of Kiwi yen, Aussie yen. When things get bad, money comes back home to the safe haven or repatriated, or just an undo, a Control-Z movement, okay, to the Japanese yen. Now, when in Europe things became worse, the European Central Bank acted. We have a negative deposit rate of minus 40 basis points and ongoing QE. The ECB is printing money. So the result is money goes to outside the Eurozone to riskier assets that yield more yield. Okay, but in times of trouble, money is repatriated. This is a very new behavior of the euro and very inconsistent. Okay, it happened last year when we had the Greek crisis. Good news from Greece, the euro fell. Bad news from Greece, the euro strengthened. Very, very strange behavior. When there was this agreement in July, deal with Greece, the euro fell. So, and also then with the Chinese stock market crash, August last year, it's going to be a year soon. It was at the end of August. The euro strengthened, reached the highest since 2014. It reached 117.12. Okay, so that was 2015. In 2016, the ECB in March added more measures, and this weighs on the euro, but it's still looking for an identity. Is it the safe haven currency? Probably not, but also not a full member, I would say, of the risk currencies. Okay, so that's another problem with euro dollar. What I've written here out of frustration as well is, does euro dollar need a bank run to move out of range? Can a bank run happen? Yes. Well, it happened in Greece, orchestrated basically by European authorities to pressure Greece, and it can happen in Italy. We know that Italy's third largest lender, Monte dei Paschi di Siena, is in trouble, even according to the ECB stress tests. In an adverse scenario of a recession, it will go bankrupt. Now, according to the rules, we need, the government is not allowed to bail it out. On the other hand, bondholders, which will carry the burden, they're also taxpayers. lots of political stuff, lots of problems there. They're not the only bank in trouble. Also, UniCredit. Also, German banks are not doing so well. Everything is very stable at the moment, and there aren't many places where money can go to. But you never know how if political pressure turns into pressure on banks, and then when people begin withdrawing money from one bank, and then things can spread out. This is a very extreme, unlikely scenario, but you never know. A more likely scenario for euro-dollar to move out of range is the month of September. And why September? First of all, the summer will be over. More traders will be in town. Secondly, we have another ECB meeting, this time with fresh forecasts. And let's see, maybe they'll do more or open the door to doing more, according to their fresh forecasts. We also have a Fed decision in September. We also have the US elections getting closer. Many things. But also, I'm saying September because it's wishful thinking, because I'm frustrated for a long time about euro-dollar. But there are reasons to be cheerful, hopeful. In past years, we had big movements in September in euro-dollar, announcements by the ECB, announcements by the Fed, and the general market storm. Okay, so, well, last year we had the market storm in August, but let's hope this year it will come in September. Okay, so that's the special segment about euro-dollar. Is here a question? What base currency would you say is the best in the long term for having as a trading currency to have? Base currency, I'm not sure I understand the question, but it's usually easier to trade the majors. The US dollar is the base currency, but as a lending currency, I don't know. Anyway, let's continue. The next segment is the preview. So this is the preview for the week of August 15th to August 19th. So as the week begins, just on Sunday night, we have Japanese preliminary GDP. Let's see how the country is doing. If the stimulus by the government is justified, if the Bank of Japan needs to do more. It's a preliminary, not the final, and the final figures change. But still a big deal. All in all, coming on a relatively empty calendar on Monday. Monday is a vacation in many European countries. The day of the Assumption of the Virgin, if I'm not mistaken. Many Catholic countries. Anyway, and in many cases, Monday is just a slow day. But Japanese GDP could rock the boat. On Tuesday, we have lots of figures already. Okay, so we have, in general, next week, we have a string of figures from the UK, which will move markets. So on Tuesday, we have the UK CPI for July, post-Brexit. Let's see if prices went up because of the weaker pound or fell because of lack of demand. It could be very mixed for the first month. Also, Brexit-related, the German ZU indicator. Last time it was for July, and it showed a big fall. It fell into negative ground, showing the negative impact of Brexit on business confidence in Germany. But now we're already 1 month further. I expect a bounce. On Tuesday, we also have U.S. inflation figures, CPI. Again, the Fed looks at the core PC price index, but this is still important. And it comes together with U.S. housing data. So lots of figures on Tuesday at the same time, 12:30 GMT as usual. And they need to go in the same direction to move, to rock the boat, okay? Yeah, I mean, all positive or all negative. And then we also have the New Zealand employment report. We talked about that. Moving forward, on Wednesday, we have the UK jobs report. So it's a bit mixed, I would say, because the jobless claims figure is for July, so it's post-Brexit. Okay, the claimant count change. That's July. But the unemployment rate and wages are for June. So it's pre-Brexit. So it'll be very, very confusing. I expect it's very choppy trading in the pound on Wednesday morning. But the big event of the week is on Wednesday, the Fed meeting minutes. These are the sorry, these are the minutes from the meeting at the end of July. We didn't have forecasts, we didn't have a press conference, only a vague statement. That's why the minutes are more important. Okay, first of all, we didn't have enough information in the statement, so now I'll have more. Secondly, when do they intend to raise rates? Of course, the ongoing question. Thirdly, it's after the non-farm payrolls that we had, the positive one. Did they have the NFP? Probably not. They probably had GDP figures. Remember, the document is always revised until the last moment. So it's not just the raw documentation of what happened in that room at the end of July, but a revised document that the writers of this document are aware that it will move markets. And let's see if they are a bit more upbeat because of the NFP or not. Okay, so that's the big event of the week. Some analysts expect a rate hike in September. I can rule it out. If everything goes well, December is on the cards, but I don't see that coming before the elections, at least. Okay. On Thursday, we have the Australian jobs report. Always a market mover for the Aussie dollar as well. Let's see if the Aussie can continue rising. And on Thursday, we have UK retail sales. Perhaps the most important release for the UK, because this is what consumers actually did in July, post-Brexit. So let's see if they did, indeed, as the soft data told us, that they halted buying, okay, that everything looks terrible, or reality is different. Remember, people still need to buy food, clothes, cars, whatever. So this will be sort of hard data. So far, we only got soft data, business surveys, consumer surveys. They were terrible. PMIs, purchasing managers indexes, these are surveys, these are intentions. Forward-looking, but not what people really did. Retail sales and also CPI and also jobs give us the hard data. Also on Thursday, we have the ECB meeting minutes, as usual, coming a bit late. But also here, it came after a meeting with no forecast, so maybe it'll reveal some more stuff towards September. Could reveal also differences within the governing council about what the ECB intends to do, how it sees the situation. Germany and other countries are relatively more hawkish. Draghi and most of the ECB are more dovish. Okay, and on Friday, not too much. Easy Friday, only data from Canada. Well, with all due respect, usually this Friday is more busy. So we have CPI and retail sales at the same time. So if you are trading the Canadian dollar, it's lots of action. For other currencies, it could be relatively slow. Okay, I see here a few questions. Jax asks, will the negative interest rate trend continue? I don't think so. It hurts bank profitability. We heard from Draghi last week that the ECB cares about share prices of banks because eventually it impacts lending. Also, the Bank of England cares about the fragile banks. And it doesn't really encourage lending. Okay, so if it would hurt bank profitability and do a lot of good for the economy, great. But it doesn't do even that. I think basically, in general, central banks have exhausted their tools. There's always a bit more they can do, but in general, the ball is gradually moving to the court of governments. Japan and Canada are leading with fiscal stimulus. In the United States, we're in an election year, and the whole chamber there is, well, the whole system is paralyzed. But there is a chance for regime change in this term in the UK. You have a new government. They are not bound to austerity. But let's see what they do. They'll probably announce something in the autumn statement in October or November. And in Germany, maybe we'll have a change of heart because they have elections next year. Okay, in Germany. But in general, I think the ball moves to the court of governments and not central banks, especially not negative rates. Ed says, I mean, my broker account is in USD and Euro. Yeah, there's last minute election candidate. CIA, yeah. Right. Yeah, I don't think it's a serious candidacy. It is referring to a guy, McMullen, his name is. I don't remember. Anyway, an alternative, a Republican alternative to Donald Trump. He's not going to be on the ballot in 50 states. He's going to be on the ballot in very few states. He might disrupt elections for Trump in Utah, a state that always votes for Republicans. He might steal a few votes from there because he's Mormon. But it's really, I don't think it's significant. Regarding your account, whatever currency you're used to, it's a personal taste. If you're USD or Euro, yeah. Yeah, another question from Jax. Thanks, Yochai. When is the next show? Well, the next show is next Wednesday, as usual. I do now these shows once a week on Wednesday and try to provide as many special segments as I can for you and others to watch along the week, during the week. And in general, I also participate in live coverages. As far as I know, there are no live coverages this week. Again, a calm week. Don't worry, next week will be more interesting. Yeah. Okay, let's do the wrap-up for today. So this is the wrap-up for the show of Wednesday, August 10th. Markets are relatively calm. Summer slowdown, people watching the Olympics. The non-farm payrolls was great and the big gain in jobs. Wages are also up, and it remains a win-win situation because the Fed is in no hurry to raise rates. Central bank support also comes from the Bank of England. The Bank of England, Carney, they fire a lot of ammunition, lower rates, more money printing. Yeah, and also the mood is looking better with oil prices that they found some kind of a bottom, escaped the $40 level in WTI, and markets are positive in general. What we are seeing is a sell-off of the US dollar. Well, relative sell-off, okay, not huge. So euro dollar is in range. 111.15 to 111.60 is the current range. 112.40 and 110.50 are on the other side of this range. Pound dollar recovers from the lows. 129.50 is the low. 130.60 is the high. To watch out for further resistance, 132.50, further support, 128.40. Dollar yen, we had a disappointment from the government and the Bank of Japan, but then recovering on the NFP and now selling off on with the dollar sell-off. 101.50 is the current level, 100.70 support, and then 100 resistance at 103.40. Well, before that, 102.50. Dollar CAD, conflicting forces, job losses in Canada versus rising oil prices, currently in range 130.80, 131.40, 132.40, support 130 and 129.10. The Aussie dollar 77, moving up, risk off sentiment. The RBA cut rates last week, but they're not expected to cut rates again anytime soon. 77.40 is the next line of resistance. Yeah, and 76.60 is support. Kiwi dollar, we had a special segment about the Kiwi dollar. Rate decision tonight, expected to cut rates. That's fully priced in, 25 basis points, but they might cut to 50 by 50 basis points or drop heavy hints of more cuts along the road, and this could hurt the Kiwi. Anyway, 72 at the moment, 71.60 to 72.60 is the current range. Let's talk about other events and about the Bank of England, NFP in this wrap-up. Well, in the wrap-up, let's talk about, mention the events for today. Jobs openings in the US should be okay, because for the month of June, which was good in the NFP, but shouldn't move markets too much. Crude oil inventories has a general impact on the mood, and the New Zealand rate decision at 9 GMT. Tomorrow, jobless claims as usual, import prices, and retail sales in New Zealand. Again, a big week for New Zealand. And Friday is the real important week. Yeah, really important day of the week, sorry. Starting early with Chinese industrial output, then a big event, German GDP. We haven't heard from Germany yet. We have heard from the Eurozone. So this will be the big event, more important than the Eurozone figure at 6 GMT. And then focus on the US consumer with top-tier figures. Retail sales for July and consumer confidence for August should really rock the boat for the US dollar. We would need huge gains in both to make markets think of a September rate hike. I don't see that as very probable. And let's see if these figures keep up. Remember, the US economy is all about consumption, or mostly about consumption. So this makes a very big difference. Okay, before we head off, more questions here. Ed says, well, you make profits, but they get eroded by devaluation. That's why I'm asking to get maximum potential out of the currency, like purchasing power. I don't have a good answer for that. When I was an Alpari customer, they came out with an FX trading account based on gold, but I never bid on that they went bust, or they moved funds to another account. Yeah, gold is perhaps a bit more volatile to have you as a base account. I would say stick to the US dollar or the euro or the pound. Perhaps it would be best to use the currency that you are personally using. It would just be easier to manage, okay? Just for comfort reasons, okay? Anyway, that's our show for today. Thank you very much, everybody, for coming, for the great questions. As usual, you'll be able to watch the full show and the special segments on FX Trade and later also on Forex Crunch. And thanks again, and see you next week. Thank you, and bye-bye.